Welcome back to Macro Examiner, your go-to channel for in-depth analysis of economic trends and financial markets. In today's video, we'll be exploring a series of intriguing charts from various investment banks that provide insights into the current state of financial markets and the economy. Let's dive in. Our first chart, sourced from the Chicago Board Options Exchange, reveals a significant milestone. On a single day, more than 1.35 million call options contracts were traded in NVIDIA, Advanced Micro Devices, and Intel, surpassing the previous record of just under 1.25 million daily call volume set in 2021. Options activity has gained prominence as traders adopt a stock replacement strategy, selling stocks and buying long-dated calls to enhance capital efficiency and replicate exposure. The year-to-date performance of chip stocks has been remarkable, with NVIDIA surging 192%, Advanced Micro Devices rising 72%, and Intel climbing 27%. NVIDIA's impressive ascent followed better-than-expected earnings results in the last quarter, accompanied by raised guidance for the next quarter, estimating revenues of approximately $12 billion. Analysts indicate that NVIDIA currently holds a dominant market share of 80% to 95% in the AI computing sector. The positive guidance from NVIDIA has not only bolstered the sector, but also increased prospects for Advanced Micro Devices to potentially capture some market share from NVIDIA. Moving on, we have another chart from JP Morgan Quant and Derivatives team that focuses on options. This chart highlights the total volume of U.S. ETF options, single stock options, and index options from 2005 to the present. Notably, the volume of ETF options now exceeds that of single stock options. This shift in market dynamics and flows can be attributed to the rise of 0 days to expiration options, which are being net sold by institutional investors. Institutional investors account for approximately 80% to 90% of the activity in 0 days to expiration index and ETF options. Moreover, the rise of exchange-traded funds has led to a significant divergence in flows between passive and active funds, as depicted in a chart dating back to 2009. Our next chart showcases the impressive performance of the Nasdaq 100. According to Bloomberg, the Nasdaq 100 is on track for its best first half ever, having risen more than 35% since January 2023. The combination of underpositioning at the beginning of the year, falling inflation, reasonable growth, and the Federal Reserve's shadow liquidity has provided support for risk-taking in the market. Now let's take a look at an image from Tier 1 Alpha that highlights the relationship between Fed liquidity and the S&P 500. In this chart, Fed liquidity is represented in purple, while the S&P 500 is depicted in blue. Fed liquidity is determined by the Federal Reserve's balance sheet minus the Treasury General Account plus overnight reverse repo. This equation helps us understand whether liquidity is being added to or removed from the financial system. As observed in the chart, there is a close directional relationship between net liquidity and the S&P 500. Moving forward, we have a chart from Morgan Stanley, which presents their proprietary Global Risk Demand Index. According to Morgan Stanley, the current reading suggests tactical sell territory. Additionally, a sentiment indicator from Goldman Sachs reveals stretched positioning for the first time in over a year. Continuing with our next chart, also from Goldman Sachs, we explore the correlation between the volatility index and the S&P 500. Typically, the correlation between the volatility index and the S&P 500 is negative, implying that as the S&P 500 rises, market volatility tends to fall. However, in the last 10 days, the correlation has turned positive, registering 0.61, compared to the long-term negative correlation of 0.8. Let's proceed to the next chart, where Goldman Sachs shares insights about U.S. small-cap stocks. According to their analysis, the Russell 2000 is projected to rise by 14% over the next 12 months, based on a simple model that factors in U.S. economic growth and starting valuations. This model has historically explained around 2/3 of Russell 2000 returns between 1995 and 2015. Our next image comes from investment bank Citigroup, which has raised its price target on Meta to a new Wall Street high of $360. Citigroup projects a 14% year-over-year growth in advertising revenue for 2024 and believes that Meta's investments in generative AI can drive incremental usage across its users, creators, and advertisers. Shifting our focus to cryptocurrency, we have a chart from Bloomberg indicating that investors poured $201 million into cryptocurrency-focused products in the last week, driven by speculation surrounding the potential approval of a BlackRock Bitcoin ETF by regulators. Next, let's delve into a chart derived from a recently published research paper by the Federal Reserve, which uncovers a significant insight. According to the paper, lower interest expenses and corporate tax rates have played a substantial role, accounting for over 40% of the real growth in corporate profits between 1989 and 2019. However, it also highlights a cautionary note, suggesting that the boost to profits and valuations stemming from declining interest and tax rates is unlikely to be sustained. Continuing our exploration, we shift our attention to an image provided by the Dallas Federal Reserve Bank. Their assessment indicates that credit standards and terms have been tightening, accompanied by a rise in loan pricing. Additionally, bankers' outlooks remain pessimistic, with expectations of an increase in non-performing loans over the next 6 months. These tightening credit standards have a direct impact on the availability of credit in the economy, resulting in decreased demand and overall economic growth. This negative trend is reflected in the chart depicting Texas manufacturing, which exhibits a downward trajectory. Finally, our last image of the video highlights the valuation of SpaceX across its funding rounds. Presently, the company holds the distinction of being the most valuable startup in the United States, boasting a staggering valuation of $150 billion. That concludes our comprehensive analysis of the charts from various investment banks, shedding light on the current state of financial markets and the economy. Remember to stay tuned for more insightful content on Macro Examiner. If you found this video informative, please consider sharing, liking, commenting, and subscribing with notifications turned on to stay up to date. Thank you for watching.